I'm Corbett Wall with DV Auction, here with the cattle market summary for the week ending August the 19th, where we had a week of correction there. And it's not like we had a big gain last week. Actually, live fat cattle were a buck lower at the end of last week, but there was a couple weeks of mild rally there before that, and we kind of knew things were overbought and could stand to back up on the board, that is. But pretty significant losses on the board this week. Not too much in the cash market, so really it wasn't that bad of a week, and there's some things to be positive about, and I think we're still probably okay. But you look at the week on the futures there, live cattle futures for October. Monday was down 55, Tuesday down 57, Wednesday down $1, Thursday down $1.82, and Friday down 32 cents. So losing days all the way around, ending the week at 110 and a quarter, down 427 for the week. Feeder cattle on the September contract, Monday was down 47, Tuesday down $1.50, Wednesday was down 65, Thursday down 177, and then Friday come back up 70 cents there to end the week at 143.70, which was down 385 for the week. And if you remember, the week on the feeder cattle really started out on a downer because the grains opened up Monday higher after that bearish supply and demand report there, and which was really hard to figure out, but kind of set feeder cattle on its ear there, and then just continued to see losses through the week. But get back to your live cattle, on the August spot markets at 113.40, with cash fat cattle mostly at 118. You just don't normally see that in August, especially when it's going to be even more so in October and December. But we're getting into the fall of the year where normally we're going to see a negative basis, or see where the board is higher than what cash is. And we thought it was going that direction, then it faltered again there. So really that could be seen as kind of a positive thing, that our cash market is staying that strong when the board refuses to support it at all. And you think we're getting in here into August pretty deep in the spot market, and we've got a basis sitting there at $4.50, and you think, well, doesn't this work on the other way? If the board was higher than what cash is, you would think that guys would start delivering cattle to take advantage of that, and you would think on the flip side that the packers would start demanding delivery of cattle. Why would they want to go out there and pay $1.18 for cattle when they could make the feedlots deliver them to them at $113.40 instead of $1.18? Well, this whole futures contract on the live side has not worked out like we thought. Everybody thought that the packers would do a long hedge because they knew they was going to have to buy cattle in the future, while the feeders were doing a short hedge because they knew they was going to have to sell cattle in the future. But the packers are not going to do anything to support the board to cause them eventually to have to give more for cattle. They don't own the long positions. They're not going to go in and buy those positions because it's going to support the market, and in the long run they're going to end up having to give more money for fat cattle. So we're just sitting here with a $4.50 basis this deep late in the week, or in the month, in the contract month, and nothing's happening about it. But it's interesting. Your fat cattle this past week on a pretty good run on a Wednesday and a Thursday, so we know these packers are needing cattle. Through Thursday there, they'd bought 91,000 head, and that's pretty much going to do it for the week, because they really didn't do hardly anything Friday at all, and didn't even hear of any cleanup sales. But for the most part, your live sales ran from 116 to 118, but largely 118. Your weighted average will be very close to 118, and that's mostly $1 lower. And your dress sales up in the northern plains from 185 to 187, but mostly 186 to 187. So we'd expect that average to be somewhere right in the middle of 186 to 187 there. And that's steady to weak. Spots $2 lower there compared to the previous week. But you look at your box beef cutout values, they've kind of failed to continue to rise. We still think maybe they did bottom out here a couple weeks ago, but we're not seeing the continued support, though, even though we would have thought we would have seen some continued buying for the Labor Day holiday this week, and really didn't see it. Your choice boxes for the week on the average trade was 201.24, which was up 70 cents. but it was kind of weaker late in the week. It closed weaker than what it was early, so we're not really going into this week with a whole head of steam there. Your select cutout values at 193.54 on the average trade, which was up $1.06. You look at cattle on feed report that come out last Friday here. Your August 1st on feed totals, the actual come in at 102% of the same time a year ago. The analyst average of the analyst guess was 101.3, so that's fair, close enough to really call it neutral there. Your placements were a little bit bearish in that your actual placements of feeder cattle in July was 102% of the same time a year ago, and the analyst's average guess was 99.6. So that is a little bit bearish, and as light as the runs were through July, and not a lot of cattle moving as hot as it was, you wouldn't have thought it would have been a whole lot, and it wasn't a whole lot, but it was 2% more than the same time a year ago. The thing you want to remember, and it's going to be hard to remember, but we need to remember that all these cattle that were placed in July, a much higher percentage of those cattle still belong to the producer or the man that turned them out on grass for the most part. A lot of those cattle that had to come off those double stock pastures there, the market wasn't very good right there. They decided to maintain ownership of those cattle, put them in the feedlot themselves. So even though those cattle were still placements, they're still placements, but they're not a lot of those are going to be end up being a captive supply already. Because a lot of times whenever they sell those cattle are already really a captive supply because they've either gone to a feedlot that's owned by a packing corporation or a corporation that also owns packing plants, or they're sold to a feedlot that's already got a pre-arrangement there with a packer and guarantees him a high percentage of what their show list is. But a lot of these cattle still belong to the producers, and I think it's a healthy thing for the market going through as these cattle get closer to being harvested. But you look at your marketings of fat cattle through July, they come out at 99% of the same time a year ago, which was exactly what the analysts thought they would be. And you think, gosh, we've been killing the heck out of these things. Actually, we marketed 10% more, but there was 2 days less slaughter this year than there was last year, so it ended up being kind of jihad right there, but still a healthy slaughter. Slaughter for this past week was 599,000, which was 21,000 higher than just the same last week, and 54,000 more than the same week a year ago. Look at your cash feeder cattle. They opened the week steady to $3 higher because we had that bearish grain report the end of that prior week, and everything thought it was going to be good. By Tuesday and Wednesday, things had kind of went sour, and nobody could figure out why we weren't getting any support on the board, especially on these out front fat cattle futures months. But feeder cattle, cash feeder cattle closed steady to $3 lower. Look at some quotes on Cattle Market Central there and out of Lexington, Nebraska. Sale barn there on Friday. Look, there's over 20 loads here listed on Cattle Market Central, and running from 885 pounds to 950 pounds, selling from 141.5 to 146.25, and that's on a Friday afternoon. If you want to see this report, check us out on Facebook, like DV Auction on Facebook. You can go to YouTube and look at Cattle Market Summary, or go to the StockExchangeNews.com. And from home office here in Canyon, Texas, we'll talk to you on Wednesday.